Let me be very clear. What is about to unfold in the world of XRP could have ramifications far beyond just one cryptocurrency. Today, we are looking at a pivotal moment that has investors, traders, and market analysts watching closely. The crypto landscape is no stranger to sudden shocks and surprises. But when a high-profile digital asset like XRP is involved, every move is amplified, not just in price charts, but in regulatory corridors, institutional discussions, and global market sentiment. This is why paying attention now is not just recommended, it's essential for anyone serious about understanding where the market is heading. To understand why this event matters, we first need to take a step back and look at XRP's unique position in the crypto ecosystem. Unlike purely speculative tokens, XRP was designed with a clear purpose: facilitating fast, low-cost cross-border payments. Its adoption by financial institutions has always been a core differentiator, giving it a degree of credibility that many other coins lack. Yet, with this advantage comes scrutiny. Investors have learned over the years that XRP is particularly sensitive to regulatory developments and legal outcomes, making it more reactive to news than some of the broader market players. When a major announcement looms, whether from Ripple Labs or a regulatory body, the ripple effect, pun intended, is often immediate and pronounced. Now, let's consider the current market environment. We are in a phase where digital assets are regaining attention from institutional investors, and macroeconomic factors are nudging traditional and digital finance closer together. Interest rates, global liquidity, and even geopolitical shifts can subtly influence crypto flows. XRP, because of its ties to banking infrastructure and high liquidity pools, tends to reflect these broader financial currents more acutely. So, when a major event approaches, it's not happening in isolation. It interacts with everything from hedge fund positioning to retail sentiment, creating a multi-layered market response that can be both rapid and nuanced. Of course, this raises the critical question: what exactly is the event we are watching, and why should it command attention? Without getting lost in speculation, we know that any significant move in regulatory clarity, major partnerships, or legal outcomes for Ripple Labs can directly affect XRP's trading dynamics. Market participants are not just reacting to the immediate news. They are anticipating potential scenarios, weighing probabilities, and adjusting positions in real time. This anticipatory behavior often creates volatility before the event itself, which savvy investors can observe and learn from. Understanding these dynamics allows one to separate noise from signals, a skill that is invaluable in the current crypto environment. Finally, it is important to recognize that XRP's price action is not the only story here. The narrative also encompasses market psychology, institutional behavior, and regulatory signaling. Every tweet, filing, or statement from relevant authorities can shift sentiment quickly. This is why experienced analysts suggest looking beyond charts and considering the underlying catalysts, because the real movement often starts in perception long before it shows up on trading platforms. As we move forward in this discussion, we will break down exactly what factors are at play, why they matter, and how investors can interpret these developments without falling into the trap of reactive panic or blind optimism. To fully grasp the potential impact of this upcoming event, we need to examine the interplay between XRP's market mechanics and its external influences. Unlike some cryptocurrencies that primarily move on speculation and hype, XRP's fluctuations are often tied to tangible developments, legal decisions, corporate partnerships, and regulatory updates. For example, a favorable ruling or clarity on compliance could prompt large-scale institutional adoption, which in turn can create buying pressure in the market. On the other hand, any uncertainty or delay in critical decisions can trigger caution among investors, leading to temporary sell-offs or stagnation. Understanding this push and pull between fundamental catalysts and market sentiment is key to anticipating price behavior. Another layer to consider is liquidity and trading volume. XRP is one of the most widely traded cryptocurrencies, meaning that even moderate shifts in sentiment can be amplified by high trading activity. Exchanges, both centralized and decentralized, provide platforms where news is digested almost instantly, and sophisticated trading algorithms often respond in milliseconds. This means that before the broader retail market even fully processes the news, XRP's price could already be reflecting the market's collective expectations. For investors, this underscores the importance of timing, perspective, and the ability to analyze market signals with a calm, rational approach. Now let's turn our attention to Ripple Labs itself, because the company's actions and announcements often serve as the linchpin for XRP's market response. Ripple has historically emphasized strategic partnerships with banks and payment providers, aiming to integrate XRP as a utility for real-world financial infrastructure. Any confirmation of new agreements, technological upgrades, or regulatory approvals can reinforce confidence, not only in the asset itself, but in the broader adoption story of blockchain-based finance. Conversely, delays or disputes can create uncertainty, reminding investors that even a strong network effect does not make a cryptocurrency immune to external challenges. We also cannot ignore the role of market psychology. In times of uncertainty, fear and greed can exaggerate reactions. Investors often anticipate outcomes rather than respond to them, leading to pre-event volatility that can be misinterpreted as a trend. For XRP, this anticipatory behavior is compounded by its history of legal entanglements and high-profile partnerships. Traders and long-term holders alike must navigate not just the news itself, but the narrative surrounding it, which often shapes decision-making more than objective data alone. Developing the ability to distinguish between short-term speculation and long-term structural shifts is crucial in this environment. Finally, it's worth noting the broader implications of this event for the crypto ecosystem as a whole. XRP's movements are frequently watched as a bellwether for regulatory sentiment and market health. Significant developments can influence other cryptocurrencies, especially those focused on payments, DeFi, or institutional adoption. Investors who monitor XRP closely gain insights not only into the asset itself, but also into emerging patterns in regulation, adoption, and market behavior that affect the industry at large. By understanding these connections, market participants can position themselves more strategically, balancing risk with opportunity in an informed and disciplined way. As we move deeper into the implications of this upcoming event, it's important to analyze the potential scenarios and what they could mean for XRP investors. The first scenario is a positive development, perhaps regulatory clarity, a major legal win, or the announcement of a strategic partnership that solidifies XRP's role in cross-border payments. In such a scenario, confidence could rise sharply, institutional interest could accelerate, and the market could see increased accumulation. However, even in positive outcomes, volatility should not be underestimated. Often, markets experience initial spikes followed by consolidation as traders take profits or recalibrate expectations. Understanding that a surge doesn't always equate to long-term stability is key for both short-term and long-term investors. The second scenario is one of ambiguity or delay. Crypto markets are particularly sensitive to uncertainty, and XRP is no exception. A postponed court decision, a regulatory review that remains inconclusive, or an announcement that lacks clarity can lead to choppy trading, widened spreads, and temporary price stagnation. In these situations, investor psychology becomes the dominant force, with fear of missing out or fear of losses driving exaggerated reactions. It's during these periods that disciplined analysis matters most. Watching market patterns, reading official statements carefully, and avoiding impulsive moves can help investors maintain perspective while others react emotionally. Another angle to consider is the role of external market conditions. Macro trends, such as interest rate announcements, equity market shifts, or global liquidity changes, can either amplify or dampen the effects of XRP-specific news. For instance, if traditional markets are experiencing heightened volatility, XRP's reaction to a favorable announcement might be muted. Conversely, in a generally positive macro environment, even a modest update can trigger disproportionate enthusiasm. Recognizing these interdependencies allows investors to assess not just the intrinsic value of the news, but its likely impact within a broader financial context. It's also worth examining the technological and adoption angle. Ripple's network continues to evolve, and any upgrades to its ledger, scalability, or interoperability with other blockchain platforms can enhance utility. For XRP, real-world adoption is as important as speculative trading. When financial institutions or remittance companies actively implement XRP in their systems, it reinforces the credibility of the asset beyond mere price speculation. Long-term investors often look for these structural signals as they indicate sustained demand potential that can weather market fluctuations more effectively than purely speculative trends. Finally, we should consider risk management strategies in light of this upcoming event. The crypto space is inherently volatile, and XRP's history demonstrates that even well-informed investors can be caught off guard. Position sizing, diversification, and a clear understanding of one's investment horizon are essential tools. Being aware of potential catalysts, monitoring regulatory updates, and maintaining a disciplined approach to buying or selling can help mitigate risk while allowing investors to participate in meaningful opportunities. This balance of caution and proactive engagement is what separates reactive traders from strategic participants in the market. As we approach the final part of our analysis, it's time to synthesize everything we've discussed and consider what the implications could mean for XRP investors in the near and medium term. One of the key takeaways is that while this upcoming event is certainly significant, it is not a standalone moment. XRP's market behavior will continue to reflect a combination of regulatory clarity, adoption trends, macroeconomic factors, and investor sentiment. Understanding these interconnections allows investors to view the event not as a single point of risk or reward, but as part of a broader evolving narrative in the crypto ecosystem. It's also important to recognize that volatility, while often seen as a threat, can also present opportunities. Experienced investors monitor these shifts to enter positions strategically, assess risk-reward ratios, and adjust portfolios in real time. For XRP, moments of high volatility can reveal investor psychology, highlight institutional activity, and provide insight into the strength of adoption momentum. Observing these patterns carefully can offer actionable intelligence that is rarely apparent in quiet or stagnant markets. Furthermore, this event reinforces the importance of informed patience. In crypto markets, news cycles can be relentless, and immediate reactions are not always aligned with long-term value creation. XRP investors who take a step back to analyze the fundamentals, regulatory clarity, institutional adoption, and network utility can make decisions based on rational assessment rather than emotional impulse. This measured approach is what allows investors to navigate high-stakes moments without compromising strategic positioning. Another critical consideration is the broader impact on the crypto market ecosystem. XRP's movements often act as a signal for other payment-focused or institutionally adopted cryptocurrencies. A major development in XRP can influence sentiment, liquidity flows, and risk perception across the sector. For market participants who monitor these correlations, understanding XRP's trajectory provides context for assessing opportunities in related digital assets, as well as insights into how regulatory trends may influence the space as a whole. Finally, as investors and observers, it is vital to remain engaged and adaptive. Monitoring official updates, reading beyond headlines, and maintaining awareness of macroeconomic trends allows for a nuanced understanding of market dynamics. In a landscape where information moves quickly and reactions are amplified, combining technical awareness with strategic foresight is the best way to navigate uncertainty. While no one can predict outcomes with absolute certainty, positioning oneself with knowledge, discipline, and perspective creates a meaningful advantage.